man, CPI inflation day. We've got Bitcoin up 2%, sitting at 17,600, just shy of that level, as we are 9 minutes away from getting our most important yet final CPI reading of 2022. Could this be the reading that finally gives Jerome Powell the green light tomorrow at the FOMC meeting, which will also be streaming, to do the 50 basis point rate hike, to finally pivot after 4 long 75 basis point rate hikes? Thank you guys so much for joining me. Don't forget to smash up likes. Don't forget to subscribe. Let's see who we've got here waiting patiently in the chat here today. We've got Vicky, good to see you here. I'm waiting an hour and a half early for this stream. Gareth Jones, good afternoon, buddy. Mike, good to see you, buddy. Barney, Mohammed, Ian, Stu, Halim, good to see all of you. Brandon, good to see you again. Pele, good to see you again as well. Stadia, hope you are well. Ken, good to see you. Pixel say, guys, good to see you all again. And as you can see, let's just jump on over into the charts before I give you a quick breakdown of what to expect, right? What are we expecting from this reading? What's a good reading? What's a bad reading? How could the markets respond? Loads to cover off. If you don't watch my video earlier about Sam Bankman-Fried, it's worth catching up on that later on as well. The guy's officially been arrested and charged by the SEC for defrauding customers. A lot's kicking off over on that front, but hopefully, bar that stuff, we should be correlated to equity markets and we should be able to move with it. And you're seeing Bitcoin up 2% today. We're in this rising wedge. We've covered off this rising wedge from a technical perspective, and you can see we're trying to break out of it. I don't think we're going to get the breakout until and if we have a positive reading. And remember, if we do get that positive reading, we're going to reclaim this important level, which is where we're sitting right now, 17,600. There's no coincidence that is where we're sat right now. What have I said for the last week or so? Since the FTX drama, I said that the June lows after the Terra Luna collapse is 17,600. That is the level we need to reclaim. We want to see us reclaim it. We do not want to get rejected from here. A bad CPI reading, and this is bad, right? Because then all we've got is a retest of that level, boom, thrown back down to the downside. So if we get a positive reading, not only do we want to reclaim it, we want to get back in the channel. So we're looking for that 18,700 level, which would be a real nice coup. Maybe that won't happen immediately. Maybe that will happen in conjunction with Jerome Powell tomorrow doing a 50 basis points. But that is the long-term vision of what we want to do. We want to get back into this channel because then we have a fighting chance of getting to 22,000 at the top of the channel. Then we can worry about the next targets going there. Okay, so we've got 7 minutes before we get the breakdown of CPI. Let me give you guys a quick breakdown of what we are expecting, right? What are we actually expecting in this market? So let's see what you guys are saying quickly to see if I'm missing anything from you guys. Good bunch of you guys joining us in here. Omar, good to see you. Keith, good to see you. Shan, Paul, good to see all of you guys. Don't forget to smash up likes, guys. There's a bunch of you in here, but the like button is not getting smashed. Let's try to jump on across to my iPad. Let's see if we can do that. Let's go there. Perfect. And give you guys a picture in picture. So what are we trying to see here? What are the expectations? Well, first and foremost, there are a few different scenarios that'll play out. Let's play out the negative scenarios and then let's play out the positive scenarios. So we know that the inflation expectation is around 7.3 for headline inflation. Okay, so headline is expected at 7.3. That is what we're expecting. For core inflation, which excludes food and energy, you want this to come in at 6.1, okay? So those are your expectations here for what the markets are expecting. So if we just pop that back on over to, let's go back over here. What I want to show you is that on a chart. So if you're looking at our normal inflation rate, which is our headline inflation, that came in at 7.7. We want that to come down to 7.3. That's what the market is expecting, that to come down to 7.3. If you take a look at the core inflation, which is removing food and energy, that notched down to 6.3. They're expecting that to notch down to 6.1, okay? So that's where we're getting those expectations from, is we want to see those figures come down. So that's what the markets are expecting broadly there. Now, let's then take this over and let's take a look at what JP Morgan thinks are the different scenarios that could play out. So the first one is, what if we get CPI higher than 7.8? So anything greater than 7.8%. Now, they're giving this a 5% probability of happening, okay? And they feel like if this scenario does happen, if we get 7.8% or higher, the S&P could be down, so the SPY, which is the S&P index, could be down -4 to 5%, okay? So down 4 to 5% on the S&P if we get a greater than 7.8% reading. Now, what if we get a 7.5 to 7.7% reading on inflation year on year. Well, if we get that, they're giving this a 25% chance of happening. So very likely scenario they're saying here almost. And we could see the SPY fall by 2 to 3% here on this situation, okay? So those are your two negative situations. If we get anything above that kind of 7.4 level, right? 7.5, 7.6, 7.7, 7.8, that is what we're expecting. Now, very quickly, what are the positive scenarios? Well, if we get 7.2 to 7.4, this is where they're putting the majority of the scenario. They're expecting, and by them, I mean the investment bankers are expecting this to be the 50% likelihood chance, and they're expecting a rally in the SPY of 2 to 3%. Okay, so they're expecting a nice 2 to 3% move. And again, if we see a 2 to 3% move here, we could be expecting much more on Bitcoin, right? Bitcoin, if it needs to do a catching up from all this FTX drama, maybe we could see a more exciting pump. You can also see the chart pattern with the full rising wedge as well, also looking quite nice as well. And then finally, if we see 6.9, and this is the moonshot, guys, if we see 6.9 or less, right? If we see 6.9 or less, this is only a 5% probability, but this could be an 8 to 10% rally, they are saying. This could be the end of the bear market, right? So this could bring an end to the bear market is what JP Morgan is saying if we see this scenario play out. So all to play for here on this reading, which is coming out in the next 3 minutes. Hopefully that gives you an expectations of what to expect. But again, let's focus on the key figures. 7.3 on the headline, 6.1 on the core, and 0.3% month on month. That is what we're looking for. Chart patterns looking nice. We'll also pull up the S&P as well. Let's just see if we can set that up for you guys as well. Let's get the split open. And that way we can see the S&P alongside Bitcoin. So we'll keep that open as well so you guys can see it. Let's keep that on a 5-minute time frame for now so we don't have it moving too much, but we will monitor this. Obviously the S&P would just be moving in the pre-market ahead of the open. Okay, so 2 minutes away from CPI. Let's see if you guys have any questions before we jump in. Let's see who we've got here. Hit that like button, guys. Yes, please, guys, do hit that like button. There's a bunch of you in here. Please do hit up the like button. Really helps this content reach more people and is super appreciated, guys. So please do smash up the likes if you can. Yeah, and altcoin, let's just take a quick look at altcoins as well leading into this. Obviously, Bitcoin moving 2%. Altcoins aren't moving much beyond that. Okay, so you can see this is Bitcoin dominance day is strong today. Bitcoin is moving, Ethereum moving less than Bitcoin. You've got Solana 0.3% today, Phantom up 1%. A lot of people ask me about Phantom. I think Phantom's in a really strong position, guys. I wouldn't be too concerned about Phantom right now. Obviously, it's just a bear market. Avalanche down, up 1%. Cadena up 1%. You've got Algorand down 0.5%. Still a painful day across the markets. It's just Bitcoin wanting to move and trying to break out of this pattern. So we'll keep this monitoring here on this wedge pattern, which we're trying to break out on Bitcoin. And we've got a minute until the inflation read. So let's see if we can pull that up and we'll start refreshing on this page. So cool. Let's see how we get on. Give me in the comments, guys, quickly. We've got 30 seconds. Give me in the comments, what are you expecting? Are we going to see, what percentage are we seeing? Remember, 7.3 is the consensus. What do you think? I'm going for 7.4. I think we're going to miss slightly, but I think the markets will be okay with it. I don't think they're going to be, I think we'll see a little bit of a rally. I don't think we're going to see anything mega. Guys, remember, anything less than 6.9, this market is going to go berserk, but that's a proper moonshot, right? Because that could spell the end of this bear market and really inflation coming down rapidly. Now, I will come onto this. Let's just refresh. Let's see what we got. That's still saying October. That's still saying October. I'll keep refreshing. My clock's on past already. That's still saying October. Just refresh on my iPad as well. They do take their own time sometimes. Let me know if you guys get it first in the comments as well. Sometimes wherever your servers are based, are always quicker. Still nothing. Why am I not getting it, guys? Are you getting it? Come on. There we go, November. 0.1% in November. Wow, 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 wow. Okay. So season adjusted and rose 7.1%. Good beat, guys. 7.1%. This is good. Markets should be responding to this. So 7.1% over the last 12 months. 0.2% November. Up 6% over the year. Okay, this is good. Let's see if I get the PDF up. That's showing the older one. Let's see if I can I'll be able to get it up on here. Boom. Let's switch across to here. I will have this up for you guys so we can look at the report. Here we go. So we've got here, as you can see, 0.1%. So that candle there, 0.1% versus 0.3% expected. That is very good. This 7.1 in the top right corner you're seeing there is versus the 7.3% we were expecting. And this figure here, that 6% you're seeing just there on the right side of the screen under the 15, that is versus the 6.1 we were expecting. So a triple beat here on inflation, and markets should be feeling quite positive about this. Let's see if we can switch on over to Bitcoin to see how Bitcoin's responding. Look at that. There you go. That's what we want, guys. Pump that price. Bitcoin now exploding. 17,800, guys. This is huge. This is a really good reading. I don't want you guys to underestimate the fact that this reading is really positive. It's a triple beat. It's better than expectations, and it's showing that inflation is really starting to inflect down. It's the rate of change that we're seeing, which is really strong, that markets will be responding to. I mean, this is really good news here. If you're looking at the diagram, when they do update the diagram, let's see how long they take to update this on this website. Normally they're pretty good actually. But this is not, there you go, 7.1%. Look at that. What I want to show you guys is not only is inflation coming down, let me put it onto the line chart. It's the gradient. Look at the gradient of that line. This is really, really good news. The rate hikes are taking place. We can also take a look at this Fed rate monitor tool now, because trust me, people are just going to price in 50 basis points right now, okay? Straight off the bat. You can all but bet your house on it. We're getting 50 basis points tomorrow. It's sitting at 71% now, but let's get a refresh because this could change over the next kind of 5 to 10 minutes as people start to price this in. Don't be surprised to see this go up to the 80s here in terms of what's being priced in. Guys, don't forget to smash up the like button. We're having a good day, and we've deserved a good day. We've been struggling here in this bear market, and finally, maybe we can now recoup this level here. Let's go over to the 5-minute chart here and watch Bitcoin run a little bit. In fact, let's put it on the minute chart because why not? And you're seeing Bitcoin move nicely now past that 17,600 level into the 17,800 level. And this is good news for the wider markets. Remember, guys, the whole reason we're in this bear market, ignore the FTX stuff, ignore the rest of the stuff around crypto. We can address that, and we have addressed that plenty. But in terms of a macroeconomic perspective, the reason we're in this situation is because we're in a tightening cycle, right? We've been in a long accommodative cycle where people were printing money. And it's when those interest rates come down, and more importantly, when the government starts printing again, that markets and crypto will really start to get their run. So this is good news. It's showing that the rate hikes are taking progress, where now we can leave those 75 base point rate hikes in the past now, and Jerome Powell is bringing inflation down. Now, there is a worry I do want to share, which a lot of people are not speaking about. And that worry is the fact that we could still have entrenched inflation. So those of you who are a little bit more experienced in economics and the history of interest rate policy will remember Paul Volcker's time. And at Paul Volcker's time, he did a great job of bringing inflation down. Aggressive rate hikes, lots of them, and he brought inflation down. Very similar to what Jerome Powell has done here, just on a slightly smaller scale. But inflation went high, and he crushed it down with 75 basis point rate hikes. But what you found then was there was a level of entrenched inflation. And that is going to be the next narrative here in terms of what happens with monetary policy, okay? Because what Jerome Powell won't want to do, he'll want to bring this all down. But what he doesn't want to do is get to 4% and just find you've got that stubborn, entrenched inflation sitting there at 4%. Remember, his target range is to bring it down to 2%. So he's got to keep going. He can't just pull back and not do rate hikes, but it makes sense for him to rotate down to 50, rotate then after that down to 25 base point rate hikes, and then do as many of those as he feels fit to his terminal rate, keep it there for however long he feels right, and then start clawing it back down. And that's where markets will start to get excited, is when we see 75 to 50, hopefully tomorrow, and then 50 to 25, and then 25 to 0. Markets will really enjoy that moment. And then, of course, when you do your first rate cut again, markets will love that as well. So this is all the kind of roadmap we've got ahead of us. But this is good progress. So, guys, definitely exciting news here on the CPI front. Good reading. Markets will be happy that this chart has happened, that headline inflation has indeed come down. Let's show you the core inflation as well. You can see core inflation 6.3 down to 6. The expectation was 6.1. Markets cannot complain about that as well. If you look at the month on month, 0.1, just 0.1% inflation, guys. So 0.1% inflation. In other words, in November, the run rate of inflation on an annualized basis, if you multiply by 12, is just 1.2. right? 1.2% annual inflation. So this is a really powerful reading in that month, and goes to show that the markets are starting to tighten. The financial markets start to tighten. Demand is starting to quell. Supply chains are starting to improve a little bit compared to where we were a while back, and we're starting to see better reads. Let's take a quick look here at the Bitcoin price, and Bitcoin continues to move here. 17,900, just shy of 17,900. S&P just having a little bit of cooling off after a real big pump up to 413 here. Let's take that on a percentage level. Let's see what the S&P is doing, up 1.4% here on the S&P. And then you've got Bitcoin up 4% today. Now, it feels like a long time since we've had a nice strong day on Bitcoin, but definitely this is a hugely positive macro perspective. Let's see what you guys are saying in the chat. I missed some of your predictions. Some of you are saying 7.1, some of you are saying 7.4. A lot of you said 7.1, which is not far off at all, guys. Congratulations. Really good predictions there from you guys. Somebody said 5. Smash the likes. Yes, please do smash up the likes. Hassan says, I was wondering why crypto was pumping. Stu, when will printing happen? The printing will happen once, markets are struggling, right? If you're in a deep recession, if you're struggling, if unemployment is an issue, then markets will go back to that process of printing, just like you had in the pandemic times as well. Ken, good to see you, buddy. Lefty, what did you miss? You missed a triple beat on inflation, buddy. Better than expected. Triple beat on inflation. Markets are moving up 3.8% here on Bitcoin. But more importantly, for me, this is good because what it means is we haven't got rejected from that 17,600 level. Let me just clear this mess a little bit here, and let's just get zoomed into this situation here. So remember, guys, based on what I shared earlier, in the range of where we're at, this is a good pump, right? Remember, we said if it was between 7.2 and 7.4% reading, we get a 2 to 3% pump on the S&P. I think we can get more than that through today. I think the markets could really be excited. Do not be surprised to see if we get a 4% day on the S&P today, and on Nasdaq moving as well. FRER 33%, what a name. I know it's dumb, but what's printing? Printing is also known as quantitative easing. It's when the government starts to print money to aid the economy. So right now we're doing the opposite. We're tightening, we're hoovering up money from the economy. That is what the interest rate hikes are doing. And we're getting another one tomorrow, which now we're predicting is going to be 50 basis points. But when we get to a situation like we were in the pandemic, where there's loose monetary policies, where interest rates are being cut and money is being printed into the economy, there is flowing money, and that money flows into risk assets, it flows into crypto, it flows into Tesla and all these other fun things, which is where you see the price of everything go up. Right now, we're not in that environment. We're in a bear market. We're in times where we need to be loading up and stocking up our coffers so that when the times do come that it's printing, the value of all our stocks, the value of all our crypto, the value of all our assets start to climb. Martin, what did he say? But that doesn't mean that later in a year we can't go still lower. I'm not sure what you're meaning. I'm not sure if you're having a conversation with someone else. Ian says hopefully Powell comes through tomorrow. I mean, this really, for me, this is a really good reading because it really puts Powell in a tricky position now, because he had a positive ADP jobs report. He had a bad non-farm payroll. The labor market was still tight. He then had a really good CPI reading, and he was really dovish in his comments and said pretty much that we were going to see 50 basis points. So I think 50 basis points is tomorrow. I think it makes sense. I think if the next reading thereafter shows that he got it wrong and inflation's coming back again, he can always pick up rate hikes again. But what he will feel confident about is he did 4 75 basis point rate hikes in a row, and it's working. It's pushing inflation down. Let's not get mistaken. Inflation's still very high, still 7% year on year, right? It's not a low level. But what happens is once you get through that first bit, you expect inflation to plummet down a lot better. And I think that's what Jerome Powell is going to take comfort in, is not just the reading, it's the rate of change, right? It's that rate of change which shows that the chart is really starting to incline downwards, this steep line downwards. That's what he's going to take confidence in, not just the fact that the reading is 7, because 7% inflation year on year is still high, right? There's no disguising that. It's still high inflation. Let's see what we're getting here. Again, you're seeing Bitcoin now up 4%, 17,900. Can we get that 18,000, guys? That would be a really good day today. Remember, I want to get us in this channel, and I don't necessarily expect that to just happen today to run ourselves back in here. But over this next week, if today's good reading was great, tomorrow can we get 50 basis points? And can we start working our way back into this channel? Because in this channel, we're far more comfortable. This is where we were pre-FTX, and it just shows that this could be an isolated FTX worries and fear, and we can get back into it. So it'll be a hugely symbolic level if we can get back above 18,800, because that's where we were before the FTX collapse. So that's an important level which I want to see us get, hopefully this week. Reckless Danny says, what's the CPI numbers? Triple beat, guys. CPI inflation, triple beat on inflation. We had 7.1% on all items versus 7.3% expected on the headline. And we had 6% versus 6.1%. Let me just show you that again here on the iPad so everybody can see it. Let's just remind you guys, this is what we're working with. 7.1% there on the headline in the top corner and 6% there on the core. If I show you that on the line graph here, that's what you can see, okay? So you can see it very clearly there. Inflation inclining down on that blue line, which is your headline, and the purple line, which is your core inflation. So definitely seeing a good trend towards the downside. You can flick through the report and kind of see the key levels which are bringing inflation down. I'll save that for another time because more importantly, we need to be looking at Bitcoin because Bitcoin is where the fun is happening here in the charts. S&P also moving nicely here, just having a little bit of a cool off before setting itself up for another move. But things are looking good. Remember, we've still got this over our heads as well in terms of Sam Bankman-Fried being arrested. But I think this is good news. I think markets will feel buoyant at the fact that SEC are charging him with fraud. He's been arrested. I think that will give markets comfort, if anything. I think it's more worrying for markets if he kept coming out doing these Twitter spaces and spreading, more lies and misinformation. I think it's better that he's been arrested. I think it's more positive for markets because we can put a line under it. We can say the justice system will do whatever they need to do and we can move on. So that's really positive. Fear and greed index is sitting at 27 anyway, even before the CPI reading. So you can imagine by tomorrow, this reading will definitely notch up a bit higher. We can see a really positive reading on fear and greed. I mean, we can even get back into the 30s, which really would show that markets are starting to feel a lot more confident, okay? So now let's switch our focus onto tomorrow, because tomorrow we're going to get our non-farm payrolls, our FOMC meeting, summary of economic projections, as well as the rate hike, okay? Now, what is this summary of economic projections? This is when the Fed and Jerome Powell sit down and they predict and forecast what they think is going to happen to the economy. And that includes GDP, it includes PCE inflation, unemployment, and other metrics as well. And they also give you the dot plot for where they think interest rate hikes will be for the next set of meetings, and therefore eventually the terminal rate as well. Okay, now we're expecting 50 basis points tomorrow. I think the CPI reading further confirms that for me. That's where I'm sitting on the fence. I'm not sitting on the fence. I'm expecting 50 basis points tomorrow. I think if we see 75 basis points, markets will not be happy. If we can see a shock 25 basis points, wow, markets are going to go through the roof. I don't expect that to happen. I don't expect Jerome Powell to go from 75 basis points to 25. I think he'll go in the middle ground. He'll go from 75 to 50, see what happens, and then reevaluate. Because from 50, if the readings go bad over the next 30 days, he very quickly in January can go back up. The next meeting's at you won't get one in January. Your next meeting's in February. He can very easily rotate back up to 75 if needed, or rotate down to 25 if needed as well. So that 50 is a nice middle ground for him. And that is why I think he's going to want to go to that level. It's almost like putting the car in cruise control, right? He's not throttling it. He's also not braking heavily. He's just kind of cruising, which allows him to react to whatever happens over the next month or so as we head into 2023. John Lewis, are you suggesting the worst is over? This is a very difficult question. It's a very difficult question, but it feels like it, right? It feels like we are getting through that peak level. We are getting that bottom, and this bear market could be coming to an end. Now, if we saw inflation at 6.8, 6.9, those levels, I think we could have been sitting here and saying, you know what? Inflation is dying. But 7.1 kind of puts you in that ground where it's a really good reading, don't get me wrong, right? It's better than the estimate of 7.3, but it's not going to be in that area where it's like confirmed, end of the bear market, off we go. But it is a really good reading. It does mean we can move forward from here. We can hopefully see 50 basis points tomorrow, and we're trending in a more accommodative environment, right? Let's look at it where we were just a couple of months ago. We're sitting in an environment where we had 9.1 inflation. And Jerome Powell doing 75 basis points after 75 basis points and 75 basis points again. And we're getting readings like 8.5. And so we're in a much better place now than we were obviously just 6 months ago. So when we look at this and we start feeling bad about crypto, you've got to remind ourselves, this is the wave which we were riding. We were riding a very tough set of cards in terms of the macro economy. And crypto in 2020 and 2021 was in a very favorable situation. Right? Very favorable situation post the pandemic, a lot of printing, and that really did put fuel behind crypto when people were getting stimulus checks and putting it into crypto, and that really did help move the price onwards. And now crypto is having to navigate through a very tough financial situation, one of the toughest you've seen for many, many years, right? In terms of inflation, in terms of the post-pandemic trading. So it's been very, very tough. Samuel, does this mark the end of the bear market? I think we covered that off. If 50 basis points comes, what price do you think BTC will head to? I think we'll just carry on. I think with 50 basis points, I hope we get into this channel. That's what I'm hoping for. And it'd be a real coup if we can get above 20. First coup for me is, can we get into the channel at 18,700? If we get 50 basis points, I don't think we're going to go crazy. I think a lot of people are expecting us to go crazy. You got to remember, 70% of the market, that's why I keep showing you this, 73% of the market is already priced in 50 basis points, okay? So the pump you'll see is just the remainder of the 20% or whatever it happens to be before the reading that hasn't priced it in, that wasn't expecting 50 basis points. They will pump the market, okay? So it's important to understand that. So for me, the main priority is to get into this box, 18,700, and then a nice level over the next week or so, if we have positive readings, will be to get back into this 20,000 level mark. That's going to be the important levels for me. Okay, let's see what else you guys are saying. Our months of DCA will yield us good profit in the long run. This is key. I know so many people. I was talking to course member lives to our members yesterday on our live stream, and I spent a good 10-15 minutes just helping people understand that there are so many people, and I get the privilege of obviously seeing a lot of your sentiment in our Discord, on the channel, in the community. A lot of people are falling out of love with crypto right now, and these are people that have held since November. And you know, as much as you want to persuade them, it's not my job to persuade, and definitely not financial advice, but it's like they've been through so much of this bear market and they're capitulating at the final moment. And sometimes they don't even know they're capitulating, right? Nobody just admits and goes, oh, I'll capitulate. Particularly the people that are like, oh, I've got diamond hands. But life gets in the way and you see it. They stop watching the videos. They start educating themselves. They're no longer DCAing. They start getting distracted with something else. And what I'm not saying is your whole life should be crypto. But if you can spend that 20, 30, maybe an hour a day staying in touch with crypto, do I need to DCA? What are the latest projects? What do I need to do? What's the market saying? And you just keep DCAing in the bear market, you're the ones who are going to, you know, gather the yield and fruit and the alpha when it comes to bull market. But if you're going to be those ones that fall out of love with crypto now, well, you're going to come back in the bull market and you're going to hate crypto. You're going to think it's a scam and you're going to rinse and repeat the same mistakes in the next cycle as well. So it's really important that in this moment, when fear is so high, it's easy for people to say, right? Buy when fear is high, but buy when blood is on the streets, buy in the bear market, sell in the bull market. Everybody knows, but life gets in the way. Things will distract you. Things will play in your head. You'll panic sell. You'll do this. And this is all about psychology. You've got to manage those psychology levels because ultimately, I've seen it time and time again. And the reason I know is because that's what shook me out of my first cycle as well, right? It's easy in the bull market and then the bear market comes and hits and you just capitulate, you panic and you just kind of leave crypto. You go back to doing whatever the day job is or focusing on your business or focusing on real estate or focusing on stocks. In my case, I was obviously in traditional finance. So I focused more on stocks. And then before I know it, crypto went on another bull run. I was like, oh, I missed it again. And that's the point. You've got to not miss these and you've got to learn from the past. Look at the previous market cycles. Look at how Bitcoin in the last cycle went up to 20, fell all the way back down to 3, ran up to 13 again, came back down to 4, and then went on its bull market. Imagine how many of you guys would have been shaken. And if those same patterns play out now, you've got to be prepared for them because you're investing in crypto. Therefore, you're opting in to go, you know what? I'm investing in one of the most volatile asset classes known to mankind. And I've seen it do 85% drawdown. So when we're sitting here at a 75% drawdown, when we're seeing that, when we're seeing FTX collapse, when we're seeing different struggles, which have happened in the past, we've had Mt. Gox, we've had various different things going on Bitfinex. These things have happened, but we're going to navigate them. We're going to get through them because we believe in crypto. We have conviction in crypto. If you don't, that's a different conversation, right? But if you actually have conviction, but you're just letting life get in the way, then you've got to navigate that. And the best way to do that is just hold on to crypto, whether it's 10 minutes a day, whether it's 20 minutes a day, whether it's 30 minutes a day. Hold on to it. Look to see if you need to DCA. Are you happy with your portfolio? And then crack on doing what you're doing. But to panic sell, to up, to go, you're going to regret that because the next bull market will be here sooner than you know it. And you're going to be like, I wish I bought, right? And it's that story which I've heard time and time again, which is ultimately, look, every single person who bought crypto from 2008, who never sold, of course they're doing really well. Right? But the reality is that it's who never sold. There were a lot of people who bought crypto in 2008, sold in 2009, bought crypto in 2009, sold in 2011, right? And those people aren't doing well because they're trying to time the market. They're getting in and they're getting out. And they don't have long-term conviction. They're not DCAing and they're not seeing the bigger picture. So there you have it, guys. A really positive CPI reading. Happy with that. Really positive news. And it really sets off this week on a positive tone because now we can go into tomorrow's FOMC meeting knowing that Jerome Powell has put a dent in inflation, coming in lower than expected with a triple beat, 7.1 versus 7.3 in the headline, 6 versus 6.1 on the court as well. And markets are rejoicing. Bitcoin up 4.1%, S&P moving as well. Can we get back to those 18,000 levels here on Bitcoin? We're just $80 shy of the 18,000 mark. Guys, make sure you stay tuned. Jump into our Discord. Make sure you're on our Telegram. Make sure you're on our Twitter as well. Thanks for watching us. Thank you for joining us on this live stream. Smash the likes. Don't forget to subscribe. And I'll see you in the next one.